On May 19th, 2024, I made this video talking about the Chinese stock market. I'm just going to let it play and let you hear what I said. This is about a few weeks ago. I do think there's a potential, and there was no confirmation, but there's a potential that these Chinese stocks are starting to form a little bit of like Adam and Eve double bottom pattern, which then he was really trying to horn into. And I do think that is looking kind of like that. Although I do think on daily and the weekly time frame, currently we're a little bit overextended. So the monthly, I don't know, I might be a little bit concerned for a little bit of retracement, maybe going sideways a little bit. And even if the candle goes sideways, like you're really talking about potentially going from like 19,000 to maybe like 17,000s, right? Like that's a little bit concerning. Now, the big support, where are you going to find the biggest support? Is probably this volume shelf line over here. And I asked Danny, this volume shelf is supposed to say like 17,800, somewhere around there. This is going to be very, very strong support. So there's potential where price is a little bit overextended on the short time frame, just kind of bounce down before going up further, right? And it can take a few months for it to do that. Yeah, so I'm going to go back to what we have seen after this video was made. When that video was made, it really was looking like it wanted to challenge 20,000, which is a very strong psychological level. And whenever things just kind of gone parabolic like this for a few months straight, you would suspect that there's going to be a little bit of overextension. And you're also hitting some very important resistance over here too on the weekly Ichimoku cloud for the Hang Seng index. The Hang Seng index is the index fund is the index that is available in Hong Kong Exchange. Hong Kong Exchange is really the place where a lot of the Chinese stocks are opening up public to trying to get liquidity from nowadays. I do think that when price is up here around getting close to 20,000, I did think that it was going to have a pretty significant retracement either through time or through price, and most likely it could hit around 17,800, which could be like at the bottom of this weekly Ichimoku cloud, or it can end up hitting some of the support right before that, right? It looks like it's doing that exactly. I mean, you just can't really have things that just get way too overextended. So, for example, you can't just have 4 straight weeks that are just way outside up a bullish band without getting punished, right? So far the last 4 weeks, a lot of people got really bullish from trike stocks, and they end up buying up here towards the top. They're getting punished for it, and they're probably regretting. And it's getting to the point where we might be getting a little bit closer to support. The support, like the strong support, is really going to be around the 17,000s. And this candle over here, the low was 17,848, right? So it was right at the support that Danny was talking about. It was right at the support of the very, very strong volume shelf. And because of that, there's a possibility that the Hang Seng may have had a very, very good bottom. I guess the volume profile is not on here for the Hang Seng. But there's a very strong possibility that the Hang Seng has bottom over here. And even if it hasn't, it doesn't really have that much further down to go. I think like you're going to get some pretty strong support around 17,200. You're going to get some pretty strong support at the more support band, right? Which is around 17,200, so somewhere around there. Then you get some pretty strong support here at the Ichimoku cloud at the bottom, which is around 17,600. And then also, again, 17,200 is also right around the baseline over here, right? You had a bullish cross over here. So you are having a little bit of a bull trend. You're just basically way too far extending, back testing a little bit here. Chinese stock is starting to look a little bit more decent. I'm going to show a little bit of a higher time frame here. Chinese stocks, again, they reclaimed the conversion line. That's always a positive sign whenever it gets above the blue line over here. Right now, it's kind of stuck in a range between the blue line and the red line over here, getting a little bit rejected over here around 18,600 or so. And it went over here, wicked up to close to 20,000. It just got way too far extended, right? It had to correct through time, and now it's stuck in a range. Is it a big deal? Probably not. I do want to say, though, the Hang Seng index is incorporating a lot of things that I would generally not get into when I think about Chinese stocks, because they also incorporate a lot of real estates. They also incorporate a lot of banking, a lot of industrials, things like that. I have no interest in getting into those kind of cyclical stocks when it comes to Chinese market, because they are very sensitive to the economic downturn and right now China's economy is still not very good. So if I'm going to get into it, I might be more interested in things that are more AI related, things that are more tech related. And if you, sure enough, you look at KWEB, you remember like you see the baseline over the red line over here is above the conversion here in the Hang Seng, right? Let's switch to KWEB, which is basically an ETF that has a lot of the China internet stocks, including Baba, JD, Tencent, PingDuoDuo, PDD, a lot of these kind of tech stocks. So you can actually see something very, very interesting is that it actually made a bullish cross over here with the monthly Tenkan Nikkei, the baseline and conversion line. You had a bullish cross over here back in April 2024. This bullish cross is possibly allowing price to push up higher over time to potentially get to the bottom of this cloud over here. But because things just got a little bit too overextended here on the weekly, if I turn off the Ichimoku cloud, things just got a little bit way too overextended on the Bollinger Band. It just had to cool off over time and form a little bit of bull flag before things go up again, right? That's exactly what it's doing right now. Does it have a little bit potentially more downside to go to the 27 range? Possible here on the Bollinger Band because it could potentially hit the bull market support band down here, right? And confluent to that, if you look at Ichimoku cloud, could it hit the bottom of the cloud around 27, 28, around the baseline over here before bouncing up further? Certainly a possibility. Looks like it wants to try and find support over here in the 29 range. Looks like it's finding some pretty good support over here. Looks like it's trying to find a higher low, maybe here, a little bit lower. If it gets down a little bit lower, if you want to get into a stock like, Baba or PTD or other, Chinese stocks. I'm gonna go for a little bit about them here in a little bit too. But you want to get a little bit into them, you can, right? Let's pull the MCDX Plus up here too. Actually, I already have it down here. I'm gonna pull up the MCDX Plus here too. On the monthly for KWEB, you're starting to see a little bit of a whale trend developing. You're starting to see retail here leaving a little bit. And RSI is just starting to kind of pick up to maybe getting close to about 50, right? So you are having some pretty decent bullish development over here, and that's incorporating with some whale momentum that are coming. Are you seeing that in the Hang Seng? You don't really quite have the bullish cross, but you also have a little bit more whale momentum coming in, and the RSI is also getting a little bit closer to 50, right? So there are some pretty positive developments, especially when it comes to Chinese tech stocks. Is quite interesting, right? A couple of things too. If you look at the one that everybody knows, which is Alibaba, Alibaba actually is not looking great. It's not as good as Hang Seng Index overall. It's also not as good as KWEB, the China Internet ETF in general. It's getting rejected by the conversion line over here, by the Tenkan line over here, and there's no bullish cross. It's way far away from the cloud. There's no whalish momentum. RSI is kind of flat. It's kind of like in the low 40s. So this is actually not a very, very good look. Like Baba is underperforming a lot of Chinese tech stocks. So if I was going to get into Chinese tech stocks, I probably won't get into Baba because there are some other ones that look a little bit more bullish. Even JD, like look at the Baba line over here, right? Getting rejected here by the conversion line or the blue line. JD is finding support over here. So you're also seeing a little bit more whalish momentum. Even though the parabolic downtrend was a lot more brutalized than Baba. Baba at least is trying to form a little bit of like a atom, maybe a little bit of an EF bottom over here. JD just went straight down, right? But it's starting to reclaim the Tenkan over here, which again, you also have a volume shuffle here that's trying to reclaim, which Baba is not really even trying to do right now. So there's a little bit of relative weakness there with Baba compared to JD. JD also has a little bit more whale coming in. And JD's momentum also is quite low. It's doing the low 40s, but it might be turning corner here a little bit. This is being a sign that maybe it's starting to turn around the corner. No guarantees, obviously. It's still far away from the baseline. If you look at the Bollinger Band, look at the monthly 20-month moving average, is still very negative sloping. It just got rejected by it in May of 2024. Whereas if you look at Baba, it's actually looking a little bit better when it comes to that because of this Adam and Eve deceleration of this downtrend. You can see that it's challenged the 20-month moving average once, twice, 3 times, potentially more, right? If you ask me whether or not to get into Baba, or if you ask me whether or not to get into JD, I probably won't do either because the Ichimoku cloud for JD is looking a little bit better, but the Bollinger Band looks like it's pretty terrible, right? And as far as Baba, the Bollinger Band with the 20-month average starting to look a little bit better. but the Ichimoku Cloud looks terrible. And also, there's no relish momentum. At least JD, you have a little bit more relish momentum that's building up, right? Still not very strong, but at least you have some that's building up. So what's looking better? Like, why does KWEB actually look pretty decent here, right? Why does KWEB actually look like it has a bullish cross and price got back above both of these Tenkan and Kitchen or conversion baselines, right? Why is it when you do the Bollinger Band, it actually looks like the Bollinger Band is starting to really compress over here on the monthly, suggesting a big move is going to come soon? And why is it that the 20-month moving average is changing trend from a bear trend to possibly the beginning of a bull trend? The 20-month moving average is starting to point up, and you have whalish momentum coming in, and again, the RSI is looking better. It's getting closer to 50. So why is it that KWEB actually looks a lot better than both BABA and JD? Well, it's because of the other Chinese tech stocks that are not as famous. For example, Tencent, TCEHY. You can see that the Tencent chart actually looks quite good. It is forming a very nice Adam and Eve bottom over here. The Eve bottom actually didn't really quite touch the Adam bottom over here. And it's getting kind of above all these resistance, all of this volume shelf right around here to get to this strong resistance line over here. Big volume shelf, big horizontal level. It dates back all the way back over here to like 2018, right? We are hitting resistance over here. So I would suspect that it would probably end up coming down to back test either the volume shelf down below around 44, 45, or back test the 20-month moving average. Regardless, this is still going to be a bull trend because it's just kind of forming up an equal high over here, and it's just trying to find maybe a little bit of a higher low before bouncing up higher. Whales are coming in. This has a very, very nice look to it, and it also had a bullish cross, right? So Tencent actually is one of those that is looking pretty decent, and it's why the KWEB index is looking pretty decent too. Another stock that you already know that's been looking very, very decent. I don't know if you heard of a company called TEMU, TEMU, TEMU.com. You can buy a bunch of cheap crap on there, and they ship it to you for a very cheap price. TEMU.com is owned by PDD. PDD is not PingDuoDuo, it's PingDuoDuo. It's basically a internet company. It's a tech company that is doing very well. The chart for PingDuoDuo PDD is looking very similar to something that I'm also very bullish on, which is Bitcoin. This is just ridiculous how much similar this is. It looks like a big giant cup over here, a little bit of a handle, broke above the cup and handle pattern, and just back tested it, found support over here. It didn't even touch this volume shelf down here, found support at a higher level, and now is looking like you want to challenge this volume shelf over here again. It's looking very, very bullish. The bulls, the whales have been building up the entire way for the last 2 years, and the RSI have just been keep on trending up, not overheated, still having some room to go. PDD, PingDuoDuo, is actually looking very, very, very bullish, and it looks like it wants to have some bullish continuation. The Ichimoku Cloud had bullish crossover here close to about a year ago. It is currently above the cloud. Like, the cloud hasn't really been completely formed yet, but it's currently above the cloud. It kind of backtested the level where the cloud would have been, and it backtested the bottom of the cloud over here. But like, it looks like it just wants to go higher whenever Chinese liquidity keeps on going. If the Chinese economy keeps on not being very well, and there keeps on having a lot of liquidity being pumped into the Chinese stock market, I think this is one of the companies that's probably going to end up doing very, very well in terms of its price, because it's just been doing nothing but forming higher high and higher lows. Right now, it's just formed a higher high over here this week. Very, very important, whalish momentum. There's not really a lot of retail left on here. So a lot of very, very important, things that PingDuoDuo is doing is looking very, very bullish. Bollinger Band continues to point up. 20-month moving average continues to point up. This is a very, very bullish stock. You wouldn't necessarily think that when you think about Chinese stocks, but TMU as a company is also doing very well. it's doing very well in like all of Asia, and they're actually taking some market shares over here in the US as well. So that is what I'm seeing with PDD. There's another stock that I also want to bring up too, is something that I think Danny is also interested in as well. My friend Danny, who lives in Hong Kong, who follows charts of all kinds of markets. I find FUTU, FUTU, to be looking really decent. Why I would say that? First of all, what is FUTU? FUTU is a company that basically owns a very convenient app that a lot of Asians, a lot of Chinese and Southern Asia folks, Southeast Asia, I should say, use FUTU to trade. It's kind of like an Asian version of Robinhood, if you will. And what you're really seeing is a very nice ascending triangle. These things are generally very, very bullish. You have a supply zone right here is trying to eat through supply, even increasing the demand over time. And when it breaks out, sometimes it back tested, the top of the triangle before its bullish continuation. Looks like it just broke through on decent volume and it's doing a little bit of a back test. Is this going to be it? Or could it go a little bit lower? Maybe perhaps instead of stopping here at $71, could it go down a little bit further to like 65? Could it go down a little bit to maybe like 61, 62? Certainly possible. If it does, and if you're interested in a stock like this, I think that may be a good buying opportunity because of the formation, because of increasing wellish momentum over the last 2 years, because the RSI has gotten about 50 on the monthly. And if you also pull up other indicators, because it had a bullish cross over here around December 2023, it is trying to find resistance up here at the bottom of this newly formed Ichimoku cloud. But overall, the formation is very, very nice. You look at the Bollinger Band, the Bollinger Band is still pointing up. It's just basically getting a little bit of ahead of itself over here, that wick above the Bollinger Band. It just have to kind of correct it sideways here a little bit. But once it breaks about the volume shelf around 78, it could potentially go up to triple digits in a hurry. The problem is the backtest could still be ongoing. It could go back down again to potentially to the low 60s, right? Or it doesn't have to. Either way, it depends on your risk tolerance. If you don't want to try to time the bottom, this is a pretty decent look. But if you buy here, and if you're gonna like really, really seriously get emotionally hurt if it goes down to like 61, 62, then don't buy. If it runs by you, it runs by you, right? Don't. It's not financial advice, but it's just common sense. That's FUTU. I do want to show a lot of confluence. Like for example, the monthly, right? You can totally see it coming back down here to the Tenkan, to the blue line over here around 62.7 to back test. I can totally see PingDuoDuo, PDD going back over to the Tenkan around 130 from 150 to kind of back test. I can totally see Tencent coming back down to this blue line from like 48 to like 42.5 to back test. I can totally see JD coming back to this blue line from like currently 29 to maybe 27 to back test. I can totally see Alibaba, if I can pull up the Alibaba chart, to go down and test some of these lower levels down here too, right? I can totally see KWEB also coming back down to the red line over here from 29 to 26. And I can totally see the Hang Seng completely crap the bed and goes way below the 17,800 that we were talking about on the video earlier. They can eventually down to like 17,200s, right? All of these things are possible. So you have to understand the risk level. You understand the potential benefits that you might get from based on the formations. I do want to talk about two last stocks here. A lot of people, when they think about Chinese stocks, they cannot escape a stock like NIO, and they cannot escape a stock like Xpeng, XPEV Xpeng, Xiaopeng. That's the company's name. NIO is having a lot of issues with its technicals. Whales are not in. RSI is not heated up at all. You have a bullish hammer candle here, so what? You have a bullish hammer candle here, right? You have a bullish hammer candle here. I cannot call a bottom because the conversion line keeps on pointing down. And this can potentially serve as some pretty strong resistance, which will take time. Even if this is the bottom, it can take time to correct, and it'll take time to kind of push back above, and it can take a whole year or two to do that. It might not be a good risk-reward ratio here. The 20-month moving average continues to point downwards. It's a little bit decelerating, but look how far prices away from the 20-month moving average. Even if it goes sideways for half a year, wait for that to flat, it's still not a good opportunity cost kind of thing for me to get into NIO at this point. Now, don't get me wrong. One of these days it's going to retrace from the mean, right? Like down here right now it's around 4.4. It can make all the way up to like 8 to just retrace the mean, go up like, like 60, 70%. And that'll still be a pretty significant gain. Is there a guarantee that's going to do that? No, because the technical is not showing that. It's still a falling knife. Whales are still not in, RSI is still not heated up. It's still a falling knife, both from the Ichimoku and from the Bollinger Band strategy. If you also just look at a weekly here, both the boomerang support band is underneath the boomerang support band. The boomerang support band is serving as a bear market resistance band. Right? I mean, I can't. Like, there's no whalish momentum here on the weekly either. So I cannot, no matter how nice the price might be to you, I cannot. Whether or not you want to, that's completely up to you. Xpeng, Xiaopeng, hammer candle over here, potential bottom, but you do have a bearish engulfing candle over here too for the month of June. It's looking a little bit better because it looks a little bit more like a double bottom and it's trying to form. This is a little bit more closer to what the Hang Seng is trying to do. It looks a little bit more like a bottoming kind of behavior. No whales, RSI is down. Maybe a little bit of hammer candle over here, but bearish engulfing. No guarantees for bottoms. For some of the other charts over here, Ichimoku, way below the conversion lines, go serve resistance. If you pull out, no bullish cross here, by the way. If you put the Bollinger Band, that's one thing that does make Xpeng look a little bit better than NIO. NIO is just look like the 20-month moving average just keep pointing downwards, whereas XPEV Xiaopeng actually looks like it's really truly flattening, right? It's just that price is underneath the 20-month moving average, so I can't really say that it's it's not resistance, but it's flattening, so it's probably not going to serve as good resistance. Sometimes all it takes is just a little bit of volume to come in, and it can price can go from like 7 to like 10 or 11 or 12, get everybody all excited, got rejected, going back down, right? But I do think there's a possibility that this is a double bottom, and that there is a possibility that we might correct over here through time and go up higher from there, but no confirmation. No confirmation. So I would probably not enter these guys over here. Anyway, the moral of the story, I guess, is if I'm going to enter Chinese stocks, which I'm not, but if I was, I'll look into the internet sector, and I would probably stay away from like the traditional big names like Baba and JD. Tencent is a little bit tricky because it's over the counter. It's OTC. I don't generally like to buy OTC stocks just because a little bit less of a lack of liquidity. If I was going to enter Chinese stocks, my two picks would be PingDuoDuo, PDD, and FUTU. Those are my two picks. Again, none of these are financial advice. These are just what I would do. And finally, another reason why I probably won't enter Chinese stocks is this. Even though I do think that there is going to be increase in Chinese liquidity, they're going to try to print a bunch of money, trying to print themselves out of an economic depression or recession. And they're in the process of doing that. I know that because Bitcoin's going up. So I know that they are printing money. The problem with investing in Chinese stocks is that there is a better alternative, proven over time, and this is called the US stock market. I'm going to pull up just in comparison of what the US stock market has done versus the Chinese stock market. It's just kind of absolutely insane in terms of like, started the inception of the SPY, right? Let's look at that. Just look at the discrepancy between the Chinese stock market and the US stock market and S&P 500. It's not even comparable. The biggest problem is that you have a period of time where US stock market is doing really well, and then the Chinese stock market can just completely plummet during this time, right? But whenever Chinese stock market goes up, the US stock market always goes up. But whenever US stock market goes down, the Chinese stock market will go down for sure. So you see what I'm saying? Like, there's a little bit of this disadvantage here for China in terms of the stock market. Whenever US goes up, China may go up or may go down, but whenever US goes down, the Chinese stock market will go down. There is a period that there could be some pretty crazy gains of parabolic tops over here for Chinese stocks. And there's a period where if you're not going to be used as liquidity, you might end up making a lot more gain on these kind of parabolic tops compared to the US stock market, right? But the problem, I think, is just a lot riskier in terms of that. Let's say for one day, if you end up just being in a hospital, you can't touch your computer, you can't trade, you can't do anything anymore. Like, what would you rather hold? Would you rather hold Chinese stocks in the Chinese stock market, or would you rather hold US stocks in the US stock market? Anyway, it's just a thought. This is in no way political. This is in no way trying to say that Chinese stocks are not going to do well. There are some economic issues in terms of what's going on over there. There are some demographic issues over there too. So I am hesitant to really get in the Chinese stock market. But if I am to do that, you already know my picks. So anyway, thank you so much, and have a good evening.